Hello and welcome to Bazaar Morning Call. We're starting a fresh new week with a full team, with the full Bazaar team in the studio. Sonia is back from her holiday. Sonia, good morning. Nigel, good morning.
Morning.
How does it feel to be back?
So, the thing is, morning, Nigel. The thing is, every time I go on holiday, the market rallies big time. So I come back and the market is at a new high.
I see the suggestion. More holidays.
Maybe I need to take a little more break.
Come back wearing a bit of a reddish.
Well, I don't know. But I mean, it was great. It was good. And it was good to see that the market as well is in super shape. Of course, Friday was not that great, but let's see.
Absolutely. But, Friday's US session has been pretty good. And that's actually amazing price action is what we saw. Let me just quickly tell you what happens. The US markets fared well despite strong jobs data, right? Yields were lower, dollar was unchanged. So hot jobs data means there is more pressure on the Fed to do more. Market pricing should have been higher. It was not, it was lower. And that is what is so amazing. And we'll talk more about this. SGX Nifty is indicating about just under a 0.25% higher start by about 40 odd points or so. Sonia, hi.
Hi, morning. So, the thing is, of course, you guys have tracked the markets all of last week, but there are a couple of things that you need to watch out for this week as well. I think the market will closely watch for the RBI policy that comes out on the 7th. And in that sense, there's an expectation that the rate hikes, there have been 3 consecutive rate hikes, they'll be moderate this time around. A 35 basis points rate hike is what is expected, especially after inflation cooled off. It fell below 7% in the month of October. So that's one thing to watch out for. Of course, the jobs data, Prashant, you'll talk about that in greater detail and the impact that that would have on our own markets, but it was indeed very strong. And the payrolls rose, the unemployment rate is steady. But put together, the big question that I'm asking is, after a bit of a pause on Friday, will the Nifty look to achieve that 19,000 mark this week? Now, FIs and DIs both bought in the cash markets, and Brent crude has also been under control, just that it rose a little bit in the last 24 to 48 hours, but largely below that $88 a barrel mark. So that's the big question, right? I mean, it's been an uptrending market. It's been so strong. The dips are getting bought if there was a dip. And perhaps that 19,000 level is something that the market could eye this week.
It could come, Sonia. And, the point is, it's looking globally as well. Just look at the price action. So jobs numbers out of the US for the 7th straight month were much higher than expectations. Markets reacted. I mean, stocks fell, yields were higher, dollar was higher. But what happened at the end, the close is what really matters, right? Markets reversed all of the hawkish reaction to the hot jobs data. And this is what is so amazing. So a couple of points. The yields, the front end of the yield curve, the 2-year yields went up 17 basis points because the jobs data was hot. But it closed up only 6 basis points. The Fed's market pricing of where the Fed rate will peak out, this is in June next year, it shot up 15 basis points immediately as a reaction to the hot jobs data to 5%. It ended back at 4.9%. You look at the equity market, the S&P 500, it fell 1%, and then recovered to ending absolutely flat, 0.12%, nothing, absolutely flat. So the main takeaway, when data goes one way and price action does not follow, when price action goes another, the main takeaway is do not fight the tape, do not fight the market, do not fight the screen. The screen is telling you one thing. I mean, you follow that till it tells you another. So that's the main takeaway. To add to that, the Fed is in a quiet blackout period all the way till the FOMC meeting, which is now, a week away, practically a week away. That's what's interesting. So markets could be in a bit of a holding pattern all the way till the FOMC. By the way, right before the FOMC meeting, you have this US CPI data, which is on the 13th. 13th CPI, and then 14th, you've got the FOMC right after the CPI number. So, and you don't have any Fed speakers in between, right? So it perhaps is possible that we're in a bit of a holding pattern all the way till then. As I said, there are warning signs. I mean, you can look at, for example, things like the WIX. WIX is now inching closer. The CBOE WIX is inching closer to 19. It's at the same levels it was in April of this year, and it's around coming to those levels where there is a bounce which starts. But the point is, you let prices tell you that. You follow prices and don't try and preempt, especially if you're trading. Here in India, I mean, the Nifty closed lower after 8 straight sessions of positive closes. So that is important. Friday's high, I mean, if you expect the market to do well, I mean, the first level to take out is going to be 18,782, which is the immediate level to cross on the upside. I would say wait for the first hour, 1.5 hours, and then kind of take a call, because you're coming off market reaction in the US, which is positive, but data, I mean, the doubt will linger whether US will follow finally once again to the data with a one-day lag. It's happened before. On the way down, 18,639, 18,600 will be the near-term support. That's the range. I mean, if that goes, that brings into view the 20-day moving average, which is at about 18,388. I mean, that is some way off, some distance away, but that's the 20-day which comes into focus. Mid-caps and small caps did very well. I mean, they did well last Friday, which is they ended up 0.5%, 0.75%. And for the week, Friday to Friday, both those indices were up between 2 and 3%. So that part of the market, the rally in a way is broadening. Nifty was down 100, but mid caps and small caps did well. And that is very, very good news. So stock-specific action in the broader market perhaps is the way to go, and not just the 50 stock Nifty index, so as to speak. So, watch that as well. You want the rally to be broader. Even if the Nifty does not rally, the broader market rallies, I think, that'll be a positive tick mark in terms of how the day has been. Nigel, what are you watching?
Well, Powell's comments on Friday, I think that's what superseded any of these red-hot jobs report or the likes. That's at least what the US market, the reaction told us. And I'll say that in Friday, our markets, it was the best session actually throughout the entire week. You'll see what you're talking about. The Nifty ended lower, right? 120 points odd. I say that because it felt like we were in an uptrending market. The breadth of the market was good. The mid-cap and the small-cap indices, they did a relative outperformance. And the outperformance was to the tune of close to 1.5% odd. So good going from the breadth of the market. Why did the Nifty end lower? Well, the cash market, there was no big worry out there. But in the F&O side of things, the FIs, they unwound some long positions big time. There was unwinding both on the Nifty futures and the Nifty bank futures. And they added some short positioning. I'm not worried about that. If you have some shorts in the system, in fact, it's good news because at some point of time, they could be forced to cover out. Short positions, well, they have gone up drastically. And the long positioning from around 75%, it's come down to around 66% odd. On the option side, the problem is that they're writing calls aggressively. So they wrote close to 1.7 lakh shares, and that's in the ratio of 10:1. The most active strikes for the 18,700 call, the 18,800 call as well, and the premiums as well should come up for you on the screen. On the downside, though, the 18,700 put did see a fair bit of writing. And on that one, the premium's around 100 rupees. So that's why the stop loss should be at around 18,600. Now, the Nifty bank, normally we don't see very big action out there on the option side. But in Friday's session, the 43,000 call saw massive open interest build up. Premiums around 350 rupees odd. That 43,500 odd mark is becoming a bit of a hurdle for the Nifty bank. So on the Nifty, resistance will be last week's high. We entered around 18,888 odd. So I'll say that's a bit of a resistance. But on the downside, 18,600 will be a support because of the writing we've seen at the 18,700 odd mark. SGX Nifty suggesting open in the green with a 30 to 40 point uptick. At some point of time, we'll get a bit of a dip. Buying the dip has worked, so don't change that. Look to buy on a dip today. What else, Sonia?
Okay, and of course, across the globe as well, right? There are things working in favor of equity markets, whether it's the China curbs, which have been eased, whether it's the dollar index, which is at the lowest level since the month of June. So let's see whether that date with 19,000 is something that the market can achieve today. The SGX Nifty is suggesting that the start will be definitely in the green. But we have a power-packed lineup. And first up, we have comments coming in from Sanjeev Prasad of Kotak Institutional Equities, who says that global equity markets seem excessively focused on just a single narrative in any market while largely ignoring other relevant variables. He says the one-trick variable are the reopening in China, growth in India, and the US Fed funds terminal rate. He also says we can only hope that these variables do not disappoint or some other negative narratives do not swamp the current narratives. In the Indian context, Sanjeev says the growth narrative looks rather weak.
Well, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says that the dollar ended the last week softer as markets chose to look through the strong jobs data in the US and focused instead on the slower path of hikes by the FOMC. He says Asian currencies led by Chinese yuan advanced with China reopening news, but the rupee continued to underperform the dollar weakness owing to domestic oil buying and a pause in capital inflows. He says the MPC this week is expected to deliver a dovish hike and the dollar INR may trade in a range of between 81 to 82 to a dollar.
And on the bonds, you have a comment from Prashant Nair itself, who says that global yields continue to drift lower as Fed Chair Jerome Powell has reiterated that the pace of hikes would be slower going forward, ignoring the strong jobs data released. Domestically, he said bonds reacted positively amid supply concerns, and he expects the MPC to effect a dovish 35 basis points hike and the 10-year benchmark bond yield to trade with a positive bias within 7.1 to 7.30%.